All right. It is Friday. And as you know, on Fridays, we do the Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing very well. It's today I'm smiling because I wasn't sure I was going to be right again with all the world going on, but nailed it.
Yes, you did. I knew you were going to be right, just so you know. I count on you being right. So let's get into it. So today is June the 10th, 2022. Yep. It is summer. What happened with CPI this week?
Yeah, so CPI came in hot. More importantly, it is what we called, right? The experts were calling peak inflation. It's all behind us. They were talking somewhere between 8 and 8.3. 3 weeks ago, I said, I don't know what these guys are smoking. We have not seen peak inflation. It is going to get worse. I actually called 8.5, 8.6, and then anchored on 8.5. So I was slightly off, but certainly better than the experts. It came in at 8.6. And we have not seen peak inflation. Everybody's now going to start going, hey, do we have it now? But folks, inflation is hot. But I do, it feels good. I'm not going to take a victory lap because for me, it's not about being right, but it's what's next. So actually, I have some thoughts on this. So there's a lot of people that was hoping peak inflation was the story, hope being the right word. So what did they do? Well, they bought the dip. Well, that didn't work out so well. Last time I checked, I think the market's down 700 points. Kathy Wood, desperate. She's got to be desperate. She was talking about a July pivot. Well, that's not going to happen. People were hoping for a September pause. Well, that's not going to happen. So what do you expect now? Well, I expect the Fed at a minimum to have 4 50-point rate hikes at each of the next 4 meetings. Second, I believe we are going to start to hear people talk about yield curve inversion, AKA a recession is coming. Why do I say that? I think the 2 is going to, the 2 and 10 is going to invert, meaning the 2 is higher rate than the 10-year. We are now going to have the Fed at least contemplate and talk about a 75 or even 100 basis point move in rates. I don't think they have the balls or the backbone to do it. I think they should. I've called for it before and will call for it again, but I think they are pretty weak. But I think calling for 4 50-point moves is the right answer. July pivot, Kathy, you're wrong. A September pause, you're wrong. But what does this mean to us as a real estate channel? Well, it means rates are going up. It means the Fed has to break the economy. What do I mean by that? We have to have a recession. It probably has to be bad. Unemployment will double or triple, which if you're getting prepared and you're listening to me, right? I bring you this news not to scare you. I bring you this news to prepare you. And if you're like all the people that talk to me all the flipping time, I'm going to do it next time. In the next recession, I'm going to take advantage of it. Well, hello, it is here. Skill up, learn. I got to push your event that you have going on in early August. It's a place I'm going to be at talking about this stuff because it is time to take advantage of this. Even if we triple in unemployment and it goes to 9% or 10% or whatever it is, that still means 90% are employed. Let's not get it twisted. There is going to be a lot of opportunity in pre-foreclosure. I'm so glad you added that to my course. It's a skill or experience I don't have. You added it. Folks, prepare now. The next 2 years, you can build wealth. The last 2 years, we have rained money on fools. The money is gone. Fools are going to get burned. Get ready. I'm going to look forward to controlling more property with less cash, and it's going to be amazing. And the fools that have been buying the dip, today hurts. The fools that are following Kathy Wood into money-losing business, today's going to hurt. I would rather own hard assets with 30-year fixed-rate debt and let inflation make me rich. Inflation makes you rich when you own hard assets with fixed-rate debt. I don't know what people need to understand. It is that simple.
So spot on. So spot on. So many pearls of wisdom in there. And I love especially this. Prepare, anticipation, what's going to happen. I want to unwind something. I want to unpack something for some of maybe the listener, the viewer who's new to your channel. You talked about 50 basis points. You talked about 4 increases potentially, right? You're predicting 4 50 basis point increases over the next going forward.
Yeah.
4 or
5
5
months.
months.
Yeah. 5 months.
Okay. So 5 months, what does 50 basis points mean? And what is 4 times 50 basis point increases? Explain that. Just break it down in layman's terms.
Yeah. So the Federal Reserve controls something that's called the Fed funds rate. It's often referred to as a very, very front end of the curve. Why is that important to us? That is what each and all other interest rates are based on. So today, simplistically, the Fed's at 0.75, ridiculously low. Sometime next week, I think it's Friday. They're going to raise rates 50 basis points. I think they should do 75 or 100. I think they're too chicken and they won't do it. So they're going to do 50, and then they're going to do 50 in July, and then they're going to do 50 in September, and then do 50 in October. And that will get us to 2.75. I think they end the year at least at 3%. And I called that months ago. I have a playlist on my channel called Whiteboard. There's a video there that talks about 2022 and 2023. I called this months ago. Why is this important? Because again, I'm an investor who uses debt, fixed rate debt, but debt nonetheless. So I have to know where debt's going so I can do deals, right? If debt's, this is a crazy thing. As an investor, I don't care if my cost of capital is 8%. I don't. I just got to write a deal where the cost of capital is 8%. I still get cash flow. I still get the yield that I want. So I need to know where it's going because my deals take time to close. So that's why it's important, right? The Fed funds impacts the 2-year, the 2-year, the 10-year, the 10-year mortgage rates, on and on in there. And mortgage rates are probably going to get more expensive.
So with mortgage rates getting more expensive, Michael, also probably what we've talked about, the anticipation is we're going to see prices soften. We're going to see
No. Well, we got to be careful with that.
Yeah, let's talk about it.
I think transactions are going to crash immediately. And as we can talk about right now, transactions are already crashing. This is the key. Real estate is a lot slower than people think. Transactions crash immediately. We saw new home sales down 17%. We saw pending homes or existing home sales down like 11 or 12%. And the numbers are getting worse.
Yep.
We have already seen FOMO from sellers. List. We have seen price cuts. 20% of inventory, according to Redfin, has seen a price cut in the last 2 weeks. But you got to remember, a price cut doesn't mean anything. If it comes out at 500, but values 400, does a 20K price cut mean anything? No, because now it's 480 on a 400. The value never changed. Sellers can list their house at anything they want. It's called wish pricing. So I believe we may have price softening next year. Real estate is so much slower than people think, but transactions crash immediately. And let's not forget, I have said for months now, the Fed broke housing. We are going to see buyer destruction. We are seeing seller destruction. I've had a dozen people on my channel over the last couple of months say, Michael, I can't move. I'm like, why can't you move? Well, I have a house at 2.8%, 30-year. If I was going to move, I need for an extra bedroom. The house is $100,000 more, but the rate's 6.25%. My payment would triple.
Yep.
That's why I have a saying: just buy bunk beds. Go buy some bunk beds. Get the kids living together, right? Living in the same room. Who cares? They did that in the 70s and 80s. Do it again.
Yep.
We have the Fed broke housing. The front end is so broken. We will have price drops. I just think they're later than most people expect. People are calling for a 30% price correction this summer. I'm like, dude, you guys have no idea how slow the market is. It doesn't move that fast.
No.
Transactions can crash 30%, but not price.
Spot on. So let's transition into mortgage demand. What's going on in mortgage demand?
Like I said, transactions. One of the leading indicators for transactions is purchase. Like most people, when they're out house shopping, they like something, they go to a mortgage broker first, right? So they know they're qualified. They know how much, all that stuff. Purchase money mortgages, 22-year low.
Wow.
Dude, demand is falling off a cliff. It is only all the numbers we've seen.
Say it again.
22-year low.
So that's
2000.
Back to 2000.
Yeah, think about that. Pre-crash, pre-Great Recession, pre-nuttiness. And that just tells me that existing home sales, new home sales are going to crash and crash hard.
Got it. And again, he's talking about demand and number of transactions. He's not talking about prices crashing. That's the distinction. Not yet. Very good. So let's transition into pending home sales. I know you alluded to it a little bit earlier. Let's talk about what happened this week.
Yeah. So folks, you got to watch all these numbers because they're falling and they've just started. I think pending home sales, I got so distracted with CPI being such a barn burner. I think pending home sales are down 11% month on month. And oh, by the way, value was up 19. So back to the point of price not falling yet, value is up 19% year on year. Pending home sales down 11%, and they're going to get worse. I don't have any good news for you on transactions. If you are a real estate agent, a mortgage broker, and you depend on purchases, time to skill up, time to become a hybrid agent. It is a time to get other income streams or go become a barista, because it's I don't have good news for the next year.
I think it's so appropriate. I love what you said, because we do have an event in August. I appreciate you talking about that a lot in your dailies and everything that's going on. And it's interesting you said this. You said this before too. It's like, hey, if you're a mortgage broker, if you're a real estate agent or broker, you may want to get a job, a part-time job at Starbucks, or maybe a bartender, or maybe a server at a restaurant, or maybe you add in more skill sets. Maybe you buy the one rental at a time, buy the course, where now we just added in pre-foreclosures, right, Michael?
Absolutely. Yeah. Again, one of the things that you know about me or follow my channel, I'm always looking ahead, looking around the corner. One of the things that I see coming in 23 is pre-foreclosures becoming a dominant way to go. It's too early now. The foreclosure process takes time, but I know if I learn it now, and I learn it from people like you who've done it before. You worked with Fannie and Freddie before. I have not. I don't know anything about it. I bought a lot of junk after foreclosures. I got to tell people that stuff's not coming this time. The debt structure, 2% of loans are adjustable rate mortgages last year. 50% of stuff was broken. The debt last time was toxic. The debt this time is an asset beyond asset. Owner occupant, 30-year debt with a 2 on it. Give me all of those that I can get. And you gave that to my course. I look forward to bringing it to your audience in your event in the SoCal in August. Give, help people. Folks, my channel is all about building wealth. My channel is not about, there are content creators that will spend the next year scaring the shit out of you. I am not that guy. I will bring you the news. I will call the bad news when I see it. I will predict the bad news, like 8.5 on CPI that came in at 8.6. But I'm telling you, at the end of that is opportunity. Do the work, get ready, change your future.
I love it. I love it. So let's talk about one last thing. So in the news this week, you talked about inventory and price drops. What did you see this week?
Yeah. So Redfin, right? The numbers are going to get bananas and scary if you don't have context. Redfin put out a report that 20% of their listings in the last 2 weeks had a price drop. That should scare you.
Yeah.
But as somebody in the business, a price drop off wish pricing is not a price drop on value. Some people picked up on the Redfin price drop 20% and said real estate's crashing 20%. No, you're just an idiot who doesn't understand the world and live in your mom's basement. Like if you think your property's worth 500, but the real market's 400 and you have a 50K price drop, have you really had a 50? No, you still have wish pricing only cut in half. I mean, real estate's really weird. You can list it. I mean, I could list a house that I live in now. Let's just pretend it's worth $1 million. I could list it today for $3 million. Then I drop it a third to $2 million. The value of $1 million's never changed. Just because I had a $1 million price drop does not mean it's suddenly more valuable. I mean, I don't know. It's just people that are in the game want to scare you. There are people out there making hundreds of thousands of dollars, 1 penny at a time, scaring people. I think that is disgusting. I will bring you the bad news because it's about to get bad, but I'm going to be about action and building wealth. Most people watch my stuff, won't take action. Some of you will. And those are the people that I look forward to helping.
I love it, Michael. And, I've got to say that you 100%, the good news, the bad news, and it's always, where's the opportunity? How do I anticipate? What are going to be my next 3 to 5 moves? So, Michael, thank you for all that you share. I want to share with the audience real quick. We have an announcement today.
Oh,
can you see that on the screen?
I can. Look at that.
Yeah. So we are doing an event. It is called Hybrid, the Real Estate Hybrid. And you can find out more information about it. Today is Friday. It's June the 10th. We are announcing, we have special guest, Michael Zuber. He's going to be joining us. Michael, it's interesting because Adrian and I were talking about this, and Joe, We want you to do like almost like a state of the union.
Mm.
Here's what's going on in real estate. Here's what you can anticipate going for the finish of 2022 into 23,
Mhm.
and where are the opportunities. So folks, you can find this information here at rehybridevent.com, rehybridevent.com. We also have special guest Thatch Wynn. And if you guys,
Yeah, if you don't know Thatch, you're missing out.
Thatch is absolutely amazing. Thatch, Joe and myself, Adrian, we've all been dear friends for decades. Absolutely phenomenal. And of course, we've got this guy here, Mr. Michael Zuber, is going to be there sharing great content, great information. Folks, you can go to the website, rehybridevent.com. And something, Michael, we talked about on another recording, but we actually have tickets are on sale, 50% off. So we literally just dropped the general admission tickets, 50% off. Those are on sale this weekend. I don't know. I'm not a hype and scare. I don't know if they'll be on sale till Monday or from Friday to Friday. I'm not exactly sure. I think it has to do with how many tickets sell.
Sure.
And then after that, we shift the pricing back to normal pricing.
Makes
but
sense.
we also have the Diamond Day, and Diamond Day is where it's the third day. It's a bonus day. That ticket is also 50% on sale. Typically, we've charged $3,000 to $5,000 for that ticket. It is on sale, 50% off as well. Michael, I just want to say thank you for letting me share this. Thank you for all that you do for One Rental at a Time community, for our community, Foundation Builders, Evo. Thank you for all the financial news and everything you do for our community.
Absolutely. I look forward to it.